Hey, what's going on, guys? My name is Richard and welcome back to the weekly watchlist video. Overall, these are the 14 stocks on my radar for this week, and we'll go through the fundamentals and technicals for each and every one so I can explain kind of my process and why I chose these ones in particular. If you enjoy my analysis, please go ahead and leave a like down below on the video. I really do appreciate it. It really does help out my channel. And of course, subscribe if you're new and are looking forward to more videos just like this one. Also, make sure if you are interested in joining the stock picking competition for this week, let me know down below in the comment section what stock you are picking, and make sure you are following the rules exactly. Otherwise, I will not count your pick. And those rules should be on screen right now, so make sure you leave the ticker symbol, your buy point, and your stop loss point all in that comment. But with that said, let's get into the video and start it off with Axon. So overall, this has been on my watch list before, and it moved up from this cup and handle nicely. And overall, taking a look at the earnings and sales, you can see substantial growth going back the past few quarters. Last quarter, earnings were up 90%, sales up 27%, and after-tax margins up 16.3%. In 2020, it's supposed to post a gain in annual EPS of 13%, and in 2021, a gain of 16%. The overall EPS rating is a very strong 98. The Group RS is an A, the SMR rating is an A, the accumulation distribution is a B, and the overall composite rating is as strong as you get, 99. And looking at the fund ownership, you can see a nice increasing trend, and you have one high-quality fund investing in this stock. And overall, the RS line is right at all-time highs, and the price action could break out above this pivot 104.90 next week. And to talk more about the setup, let's head over to TC2000 and talk about this stock. So overall, you can see it's holding its 21 EMA nicely. You had a strong gap up on huge volume, signs of accumulation right here. And you can see it's moving up nicely, formed a higher low right here, had a stochastic dot right here, as well as the purple dot, which signifies that it retook the 21 EMA. And overall, it looks like it's about to challenge for its previous all-time highs at 104.90. It's also right near the key psychological level of 100. So if it can move past this point, I think it can really go on a nice increase. But that is Axon, and next up we've got ACMR, which is a semiconductor stock. And overall, you can see that it posted pretty good growth the past few quarters, but last quarter earnings were only up 21%, sales up 19%, and after-tax margins up 9.8%. But what is important to remember is it's not often the earnings that's important, but the reaction in the price to the earnings. And after it reported this minus 21%, you can see it skyrocketed from 40 all the way up to over 60 in just a few days. So overall, the response was very positive. Looking at the annual EPS, you can see it's supposed to drop down 15% in 2020, but it's supposed to pick right back up in 2021, up 48%. The EPS rating is a 41, the Group RS is an A, the SMR rating is a B, accumulation distribution is an A-, the overall composite rating is a 94. And looking at the fund ownership, you can see it's doubled basically over the past 2 years, but you've got no high-quality funds investing in this company. And looking at the RS line, you can see it's right near all-time highs, as it is in this consolidation pattern, which is a stage 4. And taking a look at it more in depth in TC2000, you can see it broke the downward trend line on this past Friday on large volume, so I expect this to break into all-time highs sometime soon. And the entry point that I would look to use is either a green dot setup or a break above that resistance level, which is at 69.25. So next up on the list, we've got an old favorite. We've got Chegg, which was also on my list last week and acted well and looks to move up once again. So overall, you've got fantastic earnings and sales growth, up 47% last quarter. Sales were up 35%, and after-tax margins were up 22%. In 2020, the annual EPS is supposed to be up 24%, and in 2021, up a further 22%, which is very strong growth. The overall EPS rating is a 99, the Group RS is an A, the SMR rating is an A, the accumulation distribution is a very strong A+, and the overall composite rating is a 99. And looking at the fund ownership, you can see a nice increasing trend, and you have 6 high-quality funds investing in this company. The RS line is right at all-time highs, although it's not quite there just yet. The overall rating is a 96, and you can see that's past the 67.98 pivot, but hasn't quite closed above this line of resistance right here at about 70.50 or so. So looking in TC2000, I really like the strong gap up on volume that it had, how it's respecting this trend line right here, and I want to see it break above this 70.50 level or 70.49 on above average volume. But overall, you've got strong signs of accumulation. The up-down volume is 2.86. That's very, very strong. So I expect this to make its way into all-time highs. Next up on the list, we've got Chewy, which is a recent IPO, And overall, looking at its earnings and sales, you can see that it's posted no profits, but you can see that the revenue is increasing quarter after quarter, around 40%, then 20%, and then most recently up 46%. The after-tax margins were down 3% last quarter, and taking a look at the annual EPS, you can see it's not supposed to be profitable within the next couple of years. The EPS rating is a 15, the group RS is an A+, the SMR rating is not available, accumulation distribution is an A-, and the overall composite rating is a 74. Looking at the fund ownership, you can see a nice increasing trend over the past year, and you've got one high-quality fund investing in this company. Looking at the chart, you can see the RS line has been consolidating, but right near all-time highs. The overall rating is a 91. The price is also right near all-time highs, and it's also right near the pivot from the Stage 1 cup. And looking at the chart in TC2000, the setup that I would use would probably be a green dot entry setup, a 10-4-4 stochastic cross early next week if it continues to act well and bounces off this 50-day moving average. And again, I like the volume and price action. You've got some big spikes right here and right here, signs of institutional accumulation, and overall it's acting well right above this green line. So that is Chewy, and next up we've got Crowdstrike, and this was a recent stock of the week, so go ahead and watch that video if you want more information about this company. But overall, from the earnings and sales, you can see strong revenue growth, and last quarter earnings were up 118%, sales up 85%, and after-tax margins were up 2.5%. And looking at the annual EPS, you can see it's not supposed to be profitable until 2022. The overall EPS rating is a 69, the group RS is an A+, the SMR rating is a D, accumulation distribution is a B+, and the overall composite rating is a 96. Looking at the fund ownership, you can see a big increase over the past year, and you've got one high-quality fund investing into Crowdstrike. And taking a look at the chart, you can see it's right at all-time highs. The RS line is also right at all-time highs, and you've got an overall RS rating of 96. And as for entry setups, I would use a green dot setup that was activated this past Thursday if it continues to act well early next week. So that is Crowdstrike, and moving on, we've got another old favorite, Dexcom. And overall, you can see very strong earnings and sales growth going back the past 3 quarters. Last quarter, earnings were up 980%, sales up 44%, and after-tax margins up 10.2%. And looking at the annual EPS, you can see that in 2020, it's supposed to grow 15%, and in 2021, a further 43%. The EPS rating is a 76, the group RS is an A, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 98. Looking at the fund ownership, you can see it's increased and almost doubled over the past 2 years, and you've got a whole bunch of high-quality funds investing into Dexcom. And taking a look at the chart, you can see that pattern recognition has picked up a cup right here that's right near the pivot of. The overall RS rating is a 97, and the RS line isn't quite at all-time highs, but it's getting there. It's close to this peak, and overall, it looks like a very strong chart. And looking at the entry setup that I would use, it would be a break above this 415.49 level on above average volume, and you actually do have a green dot setup activated this past Thursday, so you could use that if you would like to. So that is Dexcom, and next up, we've got Infi Corp, or Infi. And looking at the earnings and sales, you can see very strong growth. Last quarter earnings were up 88%, sales up 70%, and after-tax margins up 22.6%. In 2020, annual EPS is supposed to increase 66%, and in 2021, a further 31%, so a lot of growth is expected. The EPS rating is an A2, the group RS is an A, the SMR rating is an A, accumulation distribution is an A, and the overall composite rating is a very strong 98. And looking at the fund ownership trend, you can see it's increasing nicely over the past 2 years, and you've got 3 high-quality funds investing in this stock. And looking at the chart, you can see the RS line is consolidating right near all-time highs. It's not quite over this peak just yet. And overall, you can see there's no clearly defined base right here, but it probably would take just a couple more days to identify this flat base that's forming. And as for entry setup, it did break the downward trend line last week, which was the optimal entry, but it's still very close to that kind of pivot if you entered on this day right here. And overall, you could enter from the green dot setup that was activated last Tuesday if it acts well early next week. So that is Infi Corp. And next up, we've got LVGO. So LVGO has been one of the best performers since the March bottom, and overall it's been on a tear and very hard to find a good setup to start a full position. But overall it's formed kind of a secondary shelf above this one right here, which if you are kind of on a shorter time frame, more swing trading, this could be an optimal entry. And overall the earnings growth is very strong the past 2 quarters. Last quarter up 133%, sales up 115%, and after-tax margins up 5.6%. In 2020, it's not supposed to be profitable, but it is supposed to be profitable in 2021. The EPS rating is a 76, the group RS is an A, the SMR rating is a C, accumulation distribution is an A, and the overall composite rating is a 97. Looking at the fund ownership, you can see a nice increasing trend. You've got one high quality fund investing into LVGO. And looking at the chart, you can see that the RS line is right near all-time highs, and the overall rating is a 98. And as for entry setups, I would use a green dot entry if the short-term stochastic crosses above the longer term as the stock's price moves up and eventually challenges the previous all-time highs. So that is LVGO, and next up we've got Octa. And looking at Octa's earnings and sales, you can see that's not yet profitable, but it does have very strong revenue growth, up about 45% the past 4 quarters. Looking at the annual EPS, you can see it's not supposed to be profitable within the next few years. The EPS rating is a 58, the group RS an A+, the SMR rating is a D, the accumulation distribution is a B, and the overall composite rating is a 94. Looking at the fund ownership, you can see it's tripled just about the past few years, and you've got 5 high-quality funds investing into this stock. And looking at the chart, you can see that pretty much the RS rating is right at all-time highs, the overall rating is a 95, and it just peaked above the pivot of 205.71 last week. So looking at the chart in TC2000, the entry point that I would use is either a move above these highs at around 212.02 for a more short-term swing trading setup. So that is my plan for Octa. And next up, we've got Teladoc. And before we get into the analysis of Teladoc, it was kind of a hard choice between this and Onem. I think Teladoc just kind of is a little bit better in terms of the setup. It's emerging from a flat base, and it also has more high-quality fund ownership. But I think Onem is also definitely worth your consideration. Looking at the earnings and sales, you can see it's not yet profitable, but it does have pretty consistent revenue growth, and it was up 41% last quarter. And taking a look at the annual EPS, you can see it's not supposed to be profitable within the next 2 years. The EPS rating is a 40, the group RS an A+, the SMR rating is a D, accumulation distribution is a D+, and the overall composite rating is an 89. And looking at the fund ownership, you can see it's almost doubled over the past 2 years. And you've got a whole bunch of high-quality funds investing into this company. And taking a look at the chart, you can see that the RS line is right near all-time highs. It has to make it over this peak right here. The overall rating is a very strong 97, and it's just at the pivot of this flat base in Marketsmith. And as for the entry setup that I would use, it did have a green dot on this breakout day, so you could enter the stock if it acts well early next week. So next up on the list, we've got Team or Atlassian, and overall you can see very consistent earnings and sales growth, up 19% in terms of earnings last quarter. Sales were up 33%, and after-tax margins were up 15%. In 2020 and 2021, you're supposed to increase annual EPS 28% and 23%, so there's a lot of growth expected. The overall EPS rating is a 98, the group RS an A+, the SMR rating is an A, the accumulation distribution is an A-, the overall composite rating is a very strong 99. And looking at the fund ownership, you can see a nice increasing trend. You've got 6 high-quality funds investing into this stock. And looking at the chart, the RS line isn't quite near all-time highs, although it's going the right direction. And overall, you can see it's just peaking above this kind of shelf right here. That's not quite a flat base just yet. And looking into TC2000, the entry setup that I would use is based off this green dot setup early next week if it continues to act well. But overall, I really like the volume profile on this. You can see a lot of big spikes, signs of institutional accumulation. And overall, I think this is definitely one to watch, especially if it can break out into new all-time highs above 191.72. So that is Team, and next up we've got Vertex. So taking a look at Vertex's earnings and sales, you can see very solid growth here. Last quarter earnings were up 125%, sales up 76%, and after-tax margins up 44.5%. And there's a lot of growth expected in 2020. Annual EPS is supposed to increase 67% and a further 24% in 2021. The EPS rating is a 99, the group RS an A+, the SMR rating is an A, the accumulation distribution is a B, and the overall composite rating is a 99. And looking at the fund ownership, you can see a nice increasing trend. You've got 4 high-quality funds investing in this company. And taking a look at the chart, you can see it's been consolidating in a flat base. That is a stage 2, and it's right near the pivot for that base. And overall, the RS rating is a decent, but not great, 88. And as for entry setups, the setup that I would use is a break above this 295.55 level on above average volume, or a green dot if it continues to act well. So that is Vertex, and next up we've got XP. And taking a look at XP's earnings and sales, you can see very strong growth. Last quarter earnings were up 92%, sales up 39%, and after-tax margins of 23.9%. However, in terms of annual EPS, you can see in 2020 it's supposed to drop a significant amount and not quite recover in 2021. Overall, the EPS rating, though, is a 99, the Group RS an A-, the SMR rating is an A, the accumulation distribution is a B+, and the overall composite rating is a 98. And looking at the fund ownership, you can see that it's got a decent amount of funds for a recent IPO, and it is increasing. But you don't have any high-quality funds investing in this stock. Taking a look at the chart, you can see it was in its due diligence phase and just broke above that, and the overall RS rating is a decent 95. And taking a look at what setup I would use, it would either be a green dot setup if it continues to act well, or a breakout into new all-time highs above 49.78. So that is XP, and lastly, we've got Zscaler. Taking a look at Zscaler's earnings and sales, you can see that it's posted some very significant growth the past 3 quarters. Last quarter, earnings were up 40%, sales were up another 40%, and after-tax margins were up 8.2%. In 2020, the annual EPS is supposed to drop 13%, but it's supposed to recover in 2021 up 29%. The EPS rating is a 47, the Group RS an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 94. And looking at the fund ownership, it's more than doubled over the past 2 years, and you've got 2 high-quality funds investing in this company. And taking a look at the chart, you can see a huge jump on enormous volume, and you've got an overall RS rating of 96, and the RS line right near all-time highs. And as for entry setup that I would use, it did have a green dot on this past Thursday, although this was a bad bar right here. So if it continues to act well and move up, I would consider taking up a position if I have the capital, and especially if it breaks out above 115.17 into new high ground. So that is my plan for ZS, and overall that is my watch list. I hope you guys enjoyed the video, and if you did, please go ahead and leave a like down below. And once again, remember, if you want to enter the stock picking competition, let me know your pick down below in the comment section. But that's it for me. Thank you guys so much for watching. Best of luck next week, and I'll see you guys in future videos.